Yeah. If you can recall it in the last session, what we have been discussing. So, I told you how to do this trend analysis. I taught you about what is the logic behind doing it and why we have to do it, and then eventually how to do it using Excel file. Okay, and then we discussed about this trend analysis, and then comparative analysis we talked about and did and then correlation also we did. I hope we are left with this time series analysis. Is my voice clear to you?
Yes, sir.
Okay. So first of all, we'll try to build our foundation, conceptual foundation rather, in order to understand what this time series analysis is all about. And then we will try to understand how to do it using Excel only. So this is also mostly concerned with the theoretical aspect of it. So now we'll try to comprehend what is time series analysis. So the time series analysis is a specific way of analyzing a sequence of data points collected over an interval of time. So what typically we have a sort of data with us, which actually should have to be in a sequence, which is required to be collected over an interval of time. For example, at the end of every month, or at the end of every year, or at the end of every quarter or half yearly, or something like this. So specific interval should be there. And in time series analysis, analysts record data points at consistent intervals, which I was just talking about. We should have consistent intervals over a set period of time rather than just recording the data points intermittently or randomly. So instead of going for data collection by way of randomizing it, for example, we are considering a data point for the month of January, and then 15th of February, and then 28th of December, something like this. It won't work. So we should have our consistent intervals in our data set, and then instead of going for randomization of it. Okay. However, this type of analysis is not merely the act of collecting data over time. This is the time series does not necessarily consist of collecting data only, but it is more from it. So what set time series data apart from other data is that the analysis can show how variables change over time. So what is the basis of time series analysis is that it shows us how different our data is, and how variables are changing with the passage of time. For example, sales. If we are considering sales as a variable, so it would show us how sales is changing over a specific period of time. Okay, time is a crucial variable because it shows how the data adjusts over the course of the data points as well as the final results. It provides an additional source of information and a set order of dependencies between the data. So time series analysis typically requires a large number of data points to ensure consistency and reliability. So our data would be considered as more consistent and reliable if we had a huge data set with us. So typically time series won't work for, like, if you are just considering 1 month of sale or 2 months of sale. So if you are looking for, if you want a good time series analysis, then you should have a huge data set with us, so that the consistency and reliability of data can be maintained. An extensive data set ensures you have a representative sample size that analysis can cut through noisy data. So the sample size of our data should be representative in nature. It shouldn't be typically it should be considering all the I would say all the defined period of time in our data set, instead of going randomization, just putting out some data and analyzing the data. It also ensures that any trends or pattern discovered are not outliers. Outliers should not be there. Outliers are the extreme result, extreme positive or extreme negative. For example, due to some natural calamities, our sales drastically drops for 1 month. So we should have find it if something like this is in our data set. So what we have to do, we have to eliminate these outliers. Okay, or sometime due to some external environmental factor, what happened, our sales increase just for a month. So we have to had removed all these outliers which are like either very positive or very negative. Additionally, time series data can be used for forecasting, predicting future based on historical data. So this is how it is typically typically done. Okay, so these are the things why organizations use time series data analysis, why they have to use it. Okay, so to understand the underlying cause of trends or systematic patterns over time. If a company wants to understand the trend, internal trends, or the pattern which have been faced by the company over a period of time, in order to understand those trends, companies do time series analysis. And then using data analysis, using data visualization, business users can see seasonal trend and dig deeper into why these trends occur. So in order to using data visualization, what a company can do, a company can dig deeper into the data sheet which they had with them, and then they can find out the reasons why these trends occur in the business process, of the normal business process. Okay, companies can also use time series forecasting to predict the likelihood of future events. Sorry. So time series forecasting can also be done in order to in order to predict the likelihood of the future events. कि future में क्या होने वाला है, in order to understand what can be happen in the coming future, time series forecasting can be done. Time series forecasting is a part of predictive analysis. This time series analysis comes under a forecasting technique which we call as predictive analysis. Predictive analytics means predictive, which we are predicting something based on the data we had with us. It can show likely changes in the data like seasonality or cyclic behavior. This I told you now. So if for example, if we have 3 years sales data of a company, okay, so based on that, based on each month's sale, we can generalize that, for example, December is the month where the sales is high. So so we can understand the seasonality basis of it, and we can presume that due to the festive season, since it consists of Christmas and New Year Eve, due to Christmas and New Year, or due to this seasonal behavior, our sales is increasing. So we can easily understand the seasonality pattern of the data, which helps us to understand data variables and helps us to forecast better. For example, this is a typical example. If you can read it, Day11 is public school analyzed 5 years of student achievement data. तो they have उनके पास 5 साल के स्टूडेंट ने जो अचीव किया उसका डेटा था, to identify at risk student and track progress over time. तो वो डेटा किस लिए है उनके पास, ताकि they can identify students who are at risk, और फिर उनकी प्रोग्रेस को ट्रैक करने के लिए विद द पैसेज ऑफ टाइम कि फॉर एवरी मंथ हाउ दे आर प्रोग्रेसिंग, और बाय एवरी सेमेस्टर और क्वार्टर हाउ दे आर प्रोग्रेसिंग, by the end of the term how they are progressing, by end of the academic session how they are progressing. So today's technology allows us to collect massive amount of data every day. ठीक है, तो अभी तो we can have like full load of data with us, and it's easier than even ever to gather enough consistent data for comprehensive analysis. So initially what had happened ki we were having lack of data with us. So if you want to ask if you want to do some time series analysis, or you want to forecast something like 20 years before, if you would go to some some shop or some businessman and ask him ki, show me the data of last 10 years, before 2000 or in 2001 or 2. So they won't be able to produce that last 10 years data, because at that time all the things were manually handled, and all the accounts were set in the paper and through written in the paper using pen only. But now if you want to go to any company, even the small businessman, or even the small shop owners, or even the small business houses would be able to produce the 10 years data that very easily. So now this time series analysis has become a trend which can be used. Okay, and then time series analysis example. Time series analysis is used for non-stationary data. Stationary, which is stagnant and which has stopped at one place. So it is used for non-stationary data, things that are consistently fluctuating over time or are affected by time. So it is primarily done for the things or which are consistently fluctuating. Consistently fluctuating meaning जो चीजें बार बार जो है ऊपर नीचे हैं, जिनके प्राइसेस बहुत ऊपर नीचे जाते हैं विद द पैसेज ऑफ टाइम, ठीक है, उनके लिए. एंड द बेस्ट एग्जांपल फॉर दिस sort of analysis is the stock market analysis. Stock prices, you might have heard, na? Every time something happens, with the passage of time, it has had some impact on it, like whether positive or negative. आज stock market गिर गया, आज बहुत high है, so it happens with it is typically affected by time every time. So stock market analysis is an excellent example of time series analysis in action, especially with automated trending algorithms. So initially, what was there? It was very difficult for the companies to understand the patterns, to understand. So in which companies they should invest, or for which companies they should buy the stocks, so that they can make some money out of it. But now, with automated trading algorithms that are already set, and with the just one simple click, you can easily understand or comprehend what stocks to buy, and how much to invest in what companies. So things are pretty easier now. Likewise, time series analysis is ideal for forecasting weather changes. This is also very very common example, if you can recall it, because forecasting weather changes always depends upon the historical data that we have, and any seasonal changes have occurred during last 3 years or something. So based on that, they put an algorithm and try to understand or try to make a forecast based on the historical data to predict what would be the weather, what would weather look like tomorrow. Okay, or for a week, upcoming week. And so it helps meteorologists predict everything from tomorrow's weather report to future years of climate change. तो कल क्या weather report रहेगी to after several years climate changes में what would be the major climate changes would be there, they can predict. Okay, so examples of time series analysis in action includes जो अभी चल रही है time series analysis currently are these things. Okay, so weather data, I told you already how they have to predict about the weather status. And then temperature readings, it is also very fluctuating. If in a complete day you will check your temperature, so it would change quite a number of times in a day. For example, if every hour, if you want to record your temperature, so your temperature readings can be varied. Okay, brain monitoring, EEG, which also changes with the passage of time. Stock prices also changes. Industry forecast, if you have to do, you can go with time series analysis. Rainfall measurement, heart monitoring, ECG. or quarterly sales. You can use time series analysis in it, automated stock trading, and the interest rate also. Okay. So this is basically how it is done. This is the conceptual framework of time series analysis. What time series analysis is, how we have to do it, and blah blah. Okay. Okay. So now I'll try to make you understand with the example. Okay. So this is the final sheet, but look at it and try to understand. So, okay. So your focus should be like here only, this sheet, look at it. So this is the data available with the company. Okay. So this is the date. This is the US revenue one, and this is the revenue T-1. Okay. So simply what have been done, T is this revenue and -1. So we are considering a step ahead of it. Okay. It's just a simple data. So we are doing it this way only. So this is the revenue, alternate revenue for it. Now what we have to do, we have to do the time series analysis. So for time series analysis, there are like multiple techniques of doing it. Okay, so simple techniques are like naive series modeling is there, auto regression modeling with one lag is there. Moving average method is also one of the crucial method used in time series analysis. And then there are advanced techniques also like ARMA, auto regression moving average method. Okay. And then ARIMA, auto regression integrated moving method also. Okay. So this is like a very popular technique which serves in a predictive modeling context. It steps on the idea that the future trends, how the future trends would look like to us. Okay, so it is like a more mathematical in nature if you want to understand. Okay, so I'll help you to understand how to do it. So these are the data which we can like using Python or something. We can use it, and simple regression formula is you might have read it, y is equals to ax plus b. So this is how this concept works. Okay, so chalo yahan pe hum will try to do it. So how to do it, how to do a regression analysis is that we'll just have to go to the data. Okay. Okay, go to the data and then go to the data analysis part of it. Okay, and then search regression. So regression is already there and hit okay. Okay, so this this chat box would open, and now what we have to do, we'll have to fill the ranges of it. I'll just delete all the ranges, already existing ranges. Okay, and then we have to put the X range and the Y range. So I'll go with X, Y range. X से चलो इसको try कर लेते हैं. Y range, and this is where I want to have my output. So let's suppose I want my output here only. Yeah. See, I'll just delete it. I'll just show it how it has happened, and then we'll continue on it. Okay. So this is the summary output for our time series analysis. So the main component of this analysis is the R square. So this is quite technical in nature. If you are quite familiar with the marketing research and SPSS and other research software, so you can easily comprehend what this is about. So R square value is 3.1. Oh, sorry, 3.1. Okay, and this is the other thing is the p value. So p value is R4.47 for us. Okay, and revenues with one period lag time are definitely statistically significant predictor. So if the value is like below 5, so it is below 0.5, it shows that with one period lag, our revenues are quite predictive in nature. Or then I'll just undo it. And this is like our lag period is 1 month only. I have to delete it only. Just a minute. Yeah. So sometimes this is one month lag only. So one period time lag is far from a perfect, as it does not capture seasonality pattern. So अगर हम monthly निकाल रहे हैं, so what we have done here is we are calculating it yearly only. So I kept it like 12 months blank, and then from after 1 year we have the same pattern here also. And if we will go with the same flow, like go to data analysis, regression, select axis, and then summary output. So this would be our output. So देखो, R square had quite significantly improved from 0.31 to 0.93. Okay, and p value has also increased for x variable. It's like 2 now from 0.00. So this is how typically we do our analysis here in Excel. But this is not our major concern. Just give me a break. I'll come back in 2 minutes. Yeah, hello. So sorry for this little interruption. So what I was teaching you was like time series analysis, and this is like a quite an advanced tool in Excel, if I would have to say this. And this requires a lot of understanding of research software or the analysis part, which we get as our analysis. Like R square, if R square is not very high, but it can be like meaningful, p value of x variable is very low, so hence revenues within a one time period like are definitely a statistically significant predictor, something like this only. So but this course is not primarily concerned with that financial model, that what we are talking time series analysis part. So instead of going deeper into it and teaching you regression analysis and all these things, I would like to go with this overview of financial modeling, which is our core core thing to read. Just I would try to make you understand about this financial modeling also. So this is the thing which we are supposed to do. So I would skip that regression analysis and the more complex things in that, and we will go with the financial modeling part. So now I in this in the remaining time I would try to make you understand about the financial modeling's theoretical aspect of it, and then after today's session, maybe tomorrow or whenever the time permits, so we would be moving towards creating financial modeling using Excel, like we did initially also, now step by step with each and every step by step analysis of creating all the documents required for financial modeling. So those of you who are present, try to understand the concept a little deeper, and if you had any query during the lecture, please let me know. Then I would move towards practicality of it from next session. Okay. So now we will try to understand the theoretical aspect of it. Okay. Yeah, it's working. So initially, and the first thing first, we should have to ask the primary question, like what is a financial model? Okay. So what is a financial model? A financial model is simply a tool that's built in spreadsheet software. ठीक है, फाइनेंशियल मॉडल एक आसान सा टूल है जो बनता है एक स्प्रेडशीट पर. स्प्रेडशीट हम जब किसको बोलते हैं? MS एक्सेल की जो हमारी शीट खुली होती है वो स्प्रेडशीट होती है. उस पे टू फोरकास्ट अ बिजनेस फाइनेंशियल परफॉर्मेंस इनटू द फ्यूचर. So because I was teaching you time series analysis and correlation analysis, all the things, because they all comes under the forecasting method. That is why I was more reluctant to taught you that. But so yeah, so this is why we have to do it. So in a simple spreadsheet software like MS Excel, we have to forecast business financial performance into the future. कि अगर some business, how if a business is running for like 3 years, so how would it be after 3 years also, so we can forecast it. So typically the forecast is based on the company's historical performance. I already told you if we have a data of like last 3 years, so we can predict its future ability also. And we have to keep in our minds the assumptions about the future also, because everybody knows that future is uncertain, and some things are there, like there might be certain changes based on the political, social, cultural, or monetary aspects of the country. So there's some assumptions has to be kept in mind and requires preparing. So three things we are supposed to prepare in a financial model. Number one is income statement, number two balance sheet, and finally the cash flow statement. Okay. So initially, if you could recall it, I help you to understand the PLL account, or to not understand, but to allow you prepare a balance P&L statement using Excel sheet, if you can recall it. So the same way I would teach you how to create income statement, then balance sheet and cash flow statement using Excel. Okay, so these are the three primary component which we required in order to ascertain the in order to predict the or in order to forecast the company's future. Okay, so we should have with us the historical performance of the company, and some assumptions regarding the future, and we are eventually required to prepare an income statement, balance sheet, and cash flow statement, and some supporting schedules also. No, तो इसको अभी हम नहीं डिस्कस कर रहे हैं, लेकिन हम इनको 3 स्टेटमेंट मॉडल बोलते हैं, 3 स्टेटमेंट मॉडल. तो व्हाट इज 3 स्टेटमेंट मॉडल? इफ someday I will create an exam for you which most of you won't appear, but still, so I can give like what is 3 statement model. The 3 statement model is an income statement, balance sheet, and cash flow statement. From there, more advanced types of models can be built. तो ये तो तीन मॉडल हमारे हो गए, 3 statement model, and based on these 3 models also we can build some advanced model also, which we most likely won't be discussing, because your course is confined towards this income statement, balance sheet, and cash flow statement itself. But DCF model, which is discounted cash flow analysis, leveraged buyout, which is LBO, mergers and acquisition, which is M&A, and sensitivity analysis. Though I taught you how to perform this sensitivity analysis using Excel, but it was for some other reasons, not for this. Okay, below is an example of financial modeling in Excel. So this is somehow it looks like. I remember showing you kind of the same diagram in the first class which we discussed in the last month. So this is how it looks like. This is income statement. This is the balance sheet of the company, which consists of assets, current assets, total assets, and these are the liabilities. Okay, and then the cash flow statement. So these are the 3 statements. Assumptions part is there. If some assumptions we had, so we'll put it there here only. Okay, and this is our historical data. This is 2012, 13, 14, 15, and 16. So 5-year data we have with us. And based on this 5-year data, we'll have to forecast period. So our forecast period is 17 to 22, which is also 6 years down the line. So we are predicting. Yes.
Yes, sir. Balance sheet फिर से दिखाओ ना.
It's open there. It's on the screen. Can you see it?
Okay, sir. Yes, sir.
Yeah. So this is only the theoretical aspect of it. I would help you understand how to prepare it using Excel also. Okay. So this is the historical results we have with us. These are the assumptions. If certain assumptions are there, we will put it down there. Then income statement. This is the balance sheet, cash flow statement, supporting schedule. This is our historical result, and this is the forecast period and forecasted result, how our business would move forward. Okay, so now the question arises, what is the financial model used for? Why we use financial models? So the output of a financial model is used for decision making. So this is our output model. Okay, this is our output based on our historical data. So we used it in order to make the well-informed decision and performing financial analysis, whether inside or outside of the company. Inside a company, executive will use financial models to make decisions about. Okay, so it can be used both inside as well as outside. And inside, executives will use financial models to make decisions about all these things: raising capital, debt, or equity. So based on financial models, a manager can make an informed decision for raising capital. If they want to raise the capital from market, so whether they should go for a debt or an equity. उनको debt issue करना चाहिए या फिर equity issue करना चाहिए. So, but I'm pretty much sure that you all know what is a debt and what is a equity and how it is done. If you have any problem, you can ask me. Otherwise, we can continue. But this is very basic. You might have read it in the financial management course also. What is a debt and equity? Okay, and making acquisitions. If a company wants to acquire some other's business or some other's patents or some other thing, some competitor or something, so they have to have financial models in order to understand it better and make a well-informed decision whether they should buy the business or not, and then growing the business organically. Okay, so financial models can also be used for growing the business organically. Organically means by way of like steady growth. ठीक है, तो based on our historical data we can understand कि अगर if in case we want to open a new store, ठीक है, तो whether our sale is like this, so that we can go for new store also, or new entering new market, etc. So based on the financial model we can easily understand, or financial models can be used to understand the growing capacity of a business. Okay, selling or disinvesting assets and business units. So if a part of business is not working or it is not giving, so if we are creating financial models for each and every SBUs, is strategic business units for the company, then based on the data we can forecast कि ये product हमारा जो है it's not selling good, और या तो फिर what we have to do, we have to sell this out. So financial models can be useful in that also. Budgeting and forecasting, planning for the years ahead. So फिर आगे हमारे क्या खर्चे होंगे या हमारा क्या forecast है, what has to be done. So based on that we can use financial models in order to create budgeting and forecasting planning also. Capital allocation, priority of which projects to invest in. So if we want to invest into certain projects running inside the company, so we can allocate capital based on the financial models. Valuing a business, if we want to generate the valuation of a company, or how valuable our company is, what is the valuation of the company, so we can go with the financial model, financial statement analysis, ratio analysis, and management accounting. So here financial models can be used. Now the most prominent question, and this is what we would be dealing in the upcoming lectures, is how do you build a financial model? So financial modeling is an iterative process. You have to chip away at different sections until you are finally able to tie it all together. So ये एक छोटा छोटा सा प्रोसेस है जिसमें हमको बहुत छोटे छोटे चीजें पहले बनाना पड़ेगी, ठीक है, और फिर उनको हमको we have to combine them together in order to tie it all together, ठीक है. एंड वो क्या छोटी छोटी चीजें हैं, वो कैसे बनाना है, ये नीचे पॉइंट्स लिखे हुए हैं. वी विल डिस्कस इट एंड विल ट्राई टू अंडरस्टैंड हाउ दीज थिंग्स वर्क. सो फर्स्ट थिंग, हिस्टोरिकल डेट रिजल्ट्स एंड अजम्पशन, ठीक है. तो बिफोर बिल्डिंग फाइनेंशियल मॉडल, व्हाट वी शुड हैव इन आवर हैंड is the historical data and the assumptions which we have to take into consideration while preparing the financial models. Okay, बोर तो नहीं हो रहा है बहुत? हेलो,
no sir,
you getting it na? Yeah, okay, thank you.
yes
Every financial model start with a company's historical results. So until and unless we do not have historical data or historical results with us, we cannot move ahead. Okay, so you can begin building the financial model by pulling 3 years of financial statements and inputting them into Excel. So what we have to do, we should have at least 3 years of financial statements data of a specific company, and then we'll have to put into Excel. I will show you how to do it, all these things. Next, you reverse engineer the assumption for the historical period by calculating things like, तो उसमें से हमको क्या क्या कैलकुलेट करना है, लाइक रेवेन्यू ग्रोथ रेट कितना है, ग्रॉस मार्जिन्स कितना है, वेरिएबल कॉस्ट कितना है, फिक्स्ड कॉस्ट कितना है, एपी डेज कितना है. एपी का फुल फॉर्म बताओ कोई जल्दी से. एपी डेज देखा है क्या? लिख दो इफ यू कांट स्पीक, या मोनोटोनस ही रहना है, ठीक है चलो. तो एपी इज अकाउंट पेएबल बेसिकली. सो account AP days, inventory days, to name a few, or certain things can also be added and eliminated based on the type of analysis we are doing. So we will do it using an hypothetical example. So whatever would be required, we will do it in Excel. From there you can fill in the assumptions for the forecast period as hard code. So we can have that assumptions also if it is required. Okay. And then सेकंड क्या है, टू द स्टार्ट द इनकम स्टेटमेंट. तो फर्स्ट थिंग हमको क्या करना है, सबसे पहले वी हैव टू क्रिएट द इनकम स्टेटमेंट. सॉरी, सो दिस इज this is our income statement. So with the forecast assumption in place, you can calculate the top of the income statement with revenues. You can calculate the revenue. ठीक है, COGS, which is called as cost of goods sold. ठीक है. I am in class. I'll just call you in 5 minutes. So, gross profit and operating expenses down to EBITDA. ये तो I told you how to do it, how to calculate EBITDA. Earnings before interest, tax, depreciation and amortization. ठीक है, ये we will calculate this also. And then you will have to wait to calculate depreciation. अच्छा, इसमें नहीं है वो, ठीक है, मतलब typically how we will do it is this way. I'll teach you how to generate this income statement based on our historical data. So this is how it would look like. And then after first thing, this income statement, we will go ahead with the balance sheet जो दिखाया था तुमको पहले. With the top of the income statement in any place in place, you can start to fill in the balance sheet. So income statement we will put it on the top, and then we will start working on the balance sheet. Begin by calculating account receivable. ये how this will start. सबसे पहले we will start it by account receivable, which we called as ARs, and inventory then, which are both functions of revenues and cost of goods sold. So दोनों ही part है हमारे revenue के और cost of goods sold के, as well as AR, accounts receivable days, and inventory days assumption. So we'll have to write the assumptions also कि how many AR days are with us, कि account receivable जो हमारा है वो कितना days का buffer period है उसमें, और inventory days कितना है कि एक product हमारे यहाँ कितने दिन तक ठहरता है. Assumption next, fill in accounts payable, which is a function of COGS and AP days. फिर हम उसमें भरेंगे accounts payable जो कि function है cost of goods sold का और account payable के number of days का. ठीक है. So once our balance sheet is completed, then we will go for building the supporting schedule. Before completing the income statement and balance sheet, you have to create a schedule for capital assets. So if a company, मतलब if क्या, it would have mandatorily have certain capital assets with this, like property, plant and equipment, as well as for debt and interest. The PP&E schedule will pull from the historical period. वो हमको हिस्टोरिकल पीरियड डेटा से निकलेगा, एंड कैपिटल एक्सपेंडिचर एंड सब्सट्रैक्ट डेप्रिसिएशन. तो उसको हम हिस्टोरिकल डेटा से अपना पीपीई शेड्यूल को निकालेंगे, उसमें ऐड करेंगे कैपिटल एक्सपेंडिचर्स को और डेप्रिसिएशन उसका माइनस कर देंगे. जो मशीनरी हमारे पास है, इक्विपमेंट्स हैं, तो उसका डेप्रिसिएशन माइनस कर देंगे, वो निकल के आ जाएगा. तो द डेट शेड्यूल विल आल्सो पुल फ्रॉम हिस्टोरिकल पीरियड एंड ऐड increases in debt and subtract repayments. Interest will be based on the average debt balance. Then supporting schedules के बाद complete the income statement and balance sheet. फिर हमको क्या करना होगा, अपने income statement और balance sheet को complete करना होगा. The information from the supporting schedules completes the income statement and balance sheet. तो जो हमने supporting schedules में को अगर हमने complete कर लिया तो हमारी balance sheet और इस income statement बन जाएगा. On the income statement, link depreciation to the PPE schedule and interest to the debt schedule. From there you can calculate earnings before tax. वहां से हमारा EBT निकल जाएगा, taxes and net income निकल जाएगा, और balance sheet पे link the closing PPE balance and close debt balance from the schedules. Shareholders equity can be completed by pulling forward last year's closing balance, adding net income and capital raise, and subtracting dividends or shares repurchase. So this is like more of a theoretical aspect of it, but when we will learn it like doing manually in an Excel sheet, so I hope you can understand it much clear and much clearer. Yeah. Build a cash flow statement. So after once your income statement and balance sheet is finalized, we will go ahead with the cash flow statement. So with the income statement and balance sheet complete, ये दोनों हमारा हो गया है, we can build the cash flow statement with the reconciliation method. Start तो reconciliation method से हम बनाएंगे, तो we'll have to start with the net income, फिर add back depreciation and adjust for changes in non-cash working capital. which results in cash from operations. Cash used in investing is a function of capital expenditure in the PP&E schedule, and cash from financing is a function of the assumptions that were laid about raising debt and equity. Perform the DCF analysis. So if our what we call this financial models are more comprehensive, and we have to add the DCF analysis, so we can do it. When the 3-stage model is completed, it's time to calculate free cash flow and perform the business valuation. So the free cash flow of the business is discounted back to today at the firm's cost of capital, its opportunity cost and required rate of return. And then we can go ahead by adding the sensitivity analysis and scenarios, specific scenarios for it. So once the DCF analysis and the valuation sections are completed, once those are completed, it's time to incorporate sensitivity analysis and scenarios into the model. The point of this analysis is to determine how much the value of the company or some other metrics will be impacted by changes in the underlying assumption. This is very useful for assessing the risk of an investment or the business planning purpose. For example, if in case the company wants to raise money, if sales volume drops by X%, so we can, this is a scenario, and we can have our sensitivity analysis based on that, and we can easily comprehend to whether go for it or not. So this is like comprehend. This is the simple screenshot of it. You can see it, how much it is changing or how things are going the way they are going. We'll learn it in our Excel sheet only. The final part of your creating financial model is to build charts and graph. The clear communication of result is something that really separates great from merely good financial analyst. ठीक है, अगर क्लैरिटी अगर तुम्हारे कम्युनिकेशन में, और इफ यू कैन मेक ब्यूटीफुल चार्ट्स एंड ग्राफ्स, सो इट वुड हेल्प यू टू बिकम अ गुड फाइनेंसर, आई वुड से, और फाइनेंशियल एनालिस्ट. द मोस्ट इफेक्टिव वे टू शो द रिजल्ट ऑफ फाइनेंशियल मॉडल इज थ्रू चार्ट्स एंड ग्राफ्स. ठीक है, इफ यू मतलब इफ यू हैव डन अ ग्रेट जॉब एंड you are putting all the data in front of your stakeholders or the company, so it won't be a very good idea until unless you are going with the charts and graphs. So because they are more easy to comprehend and to make certain decisions based on that. So most executives don't have the time or patience to look at the inner workings of the model. So they don't want what has happened in the background. They are more inclined toward understanding based on the model only. पीछे क्या हुआ है, they don't want to know, or they don't want to go deeper into it, and they just want your help with the models and graphs and charts only. Okay, so charts are the much more attractive. So you can see it. This is how chart is done. So this is also the screenshot which I show you probably like when I was taking the first session or something like this. So these are the key financials of the company. You can see it. Okay, and this is the average, this is the current, if you can see it. So this is based on that. We will discuss it when we will create our own Excel sheet based on all these things. So this was the more theoretical part of it. Maybe tomorrow or whenever the class is scheduled, I'll try to help you understand how we can do these sort of how we can create these sort of financial models in our Excel, which we are doing. I hope you understand what have been taught today. Thank you so much for your patience listening. If you had any question, you can ask me. Otherwise, you can leave. Thank you so much.
Thank you.
Okay. Thank you. I learned this. Bye. Take care.